Good morning, guys. That was a little bit of hullabaloo here right before they started. A little a few minutes ago, I lost my internet for a few minutes. Everything went down. I was like, oh crap. So I figured I was gonna have to give you a bad piece of news there, but no update this morning. But we came back on again, so let's hope it stays on. So starting off today, looks to me like we have after yesterday's little overnight scare, it looks to me like we hold on to the gains. We had a little melt up at the very close, a little pop here right at the close, right up to that 64.50. So I was shifting my bias. Remember, we started, if they closed above that 40 or 50, the 40 and 50 resistance areas, we were going to be taking off that range bound and started thinking about the long side again. And at this point, I'm going to start range bound this time around, and I'm going to cycle back to this a bit. But I mean, there's surprising strength in the overnight here, so we'll see if that can hold on going into today's session. But first, the news we have on tap. We had the mortgage apps come out. It was not the big change, a little bit to the downside. We have nothing at 8:30, but then at 10 o'clock we get factory orders and job openings. That's pretty much it. And then we have a couple of a treasury announcement, beige book at 2. That could be something there. However, tomorrow we get a ton of news come out. Job cut report, GDP, international trade, jobless claims, productivity, a ton of stuff going on tomorrow. And on Friday, of course, we have the employment situation. So there you have it. And let me just remind you, on Friday I won't be in here, so I'm not going to open the room on Friday. I'll be out chasing marlin. So that's going to be one of those Fridays which you just have to work it out. Anyway, so starting off the ES, yesterday's rundown, they ran it all the way down here, shook out a bunch of weaknesses, basically the elevator down, just for the overnight. And then in the day session, we had a little bit of strength and another attempt to take it lower, which failed. And then a slow grind all the way back up. So early weakness, strong close, and a little pop at the end. That's a good sign. That's a sign of a strong market. So it looks to me like this dip got bought right away. And we are back up here above that 64.45 to 50 level. And I would start off range bound. I was yeah, just to see if it's going to be, if this is more of a fake out or not, but technically they're up here in this upper range again. Um, but I'm going to give it a little bit of time here to see if they can hold on to this gain, see hold that 64.45 to 50s. And if for some reason they trade below it, right back into these lower ranges again, then we may be back range bound, maybe back on the short side before you know it. But we have this little attractor area, 6400. We have an attractor area at 64.75 to 80 up here, two little high volume nodes. And right now we're trading right in the middle of that in this low volume area. So we have a volume edge right up here at 64.60s. That's what's been reverse retested. And if they can take that out, I mean, we'll be right back up in action again. So and that would be a one of those, maybe it turns into one of those Septembers when the market actually does well. Usually September is one of those pretty seasonally just weak for some reason. People just August, September freak out and do all sorts of stuff. So it's almost like a rumor, not a rumor, it's almost like a self-fulfilling prophecy. Yeah, it has to be volatile in like August, September. So yeah, it's going to be volatile. So let's sell, and then you create your own volatility, you know. But given the structure right now, the sell-off yesterday, the strong close, and the fact that we're above that 45.50 level, starting off range bound, I would look to buy against the 45s and the 35s. Uh, for rotations back up. But if they are below that 35, that's it. I'm not going to be looking to be aggressively buying. They may run it down to the 30, 25, 30s. That may be a buying opportunity as well. But I'm going to be pretty quick on shifting my range bound bias back to the short side or towards the short side if they start trading below it again. Now we may just be going back and forth between these high volume areas for a bit. So not until they really take out that 63.90 level on the downside. It's this lower volume edge right there. If that comes out, that's when you really have to worry about the short side. Because if they second time around here run down to this attractor at the 6400, then run that lower volume edge, I think that's when you really lean in on the short side and looking for a bigger move to the downside. But they can run it back down here to the 6400. They can run it right back up to the 6475s and go back and forth here and build value. We're starting off right now, range bound, giving it a little bit of room to see if we're going to get this strength is going to hold on. And if it holds, I'm probably going to shift my bias towards the long side, or yeah, depends if it can take it up here above the 70s. But we're probably staying range bound here and see if how strong this can get. If it starts taking out these upper resistance areas, the 70s, the 80s, 90s, I mean, these are resistance areas I would look for short setups against right now, given this pullback. But if they take out that 90s, that would be the last one, and we are right back up in price discovery in no time. So we're starting off range bound, looking to buy. I would favor the long side, looking to buy against that 45s, the 35s, maybe down to the 25s. Rotations back up here. Below that, 25 for sure, the London low. We are definitely back on a short side. Looking for rotation down to the 15s, maybe even the 6400s. And as I said, if they clear that lower volume edge, this lower volume edge. Let me see if I can show you that. Yeah, it's gonna be below that 63, 6400, 6385. It's going to be somewhere in this edge. So you have the edge right there, then you have a small edge here at the 90s. So they clear these two support areas, bets are off, and we're heading lower at that point. So I'll say I'm going to be modestly optimistic. I thought yesterday's strong close was a pretty good sign that this is getting bought, and we're not going to see a big correction right from the get-go here. All right, so that's how we get started. So I'm looking to buy against those three support areas, the 45s, 35s, maybe down to the 25s, rotations back up. Below 25s for sure, take off the any slight bias to the upside and just go back to the towards the short side. But I would say primarily range bound. So if they trades higher, I would be looking for shorts against the 60s, the 70, 75, well, the 70, 80s and 90s, probably the better short areas, but probably the better areas for shorts. Yeah, excuse my voice and my harkling. It's just freaking this leftover crap. You just start talking and it starts just giving you a hard time. But anyway, so that's how we get started on the ES. Let's take a look at the Nasdaq and the bonds. Bond market is just range bound. Not much to say, but it's been range bound back and forth. So it's been pretty much the same analysis, unless something bigger reprices it. Anyway, I thought there was something going on here beginning of the month, but not much. Turned into nothing. So at this point, just range bound, right? They drift up and down. So right now we're looking at a trading around the 113.20s. So I would look to, at this point, to sell against the 20s, the 13.20s, the 13 or the 114s up to the 114.08s. I'm going to buy against support 13.16s, 13.08s, 1300s for rotations back up again. So pretty much a range bound analysis back and forth on the bonds. And you can see, I mean, I show you that now and then. It's the capital flow is just a big freaking D distribution coming to balance. So they are run about 114 here is the value area, and that's going back and forth and back and forth. And that it's good. I mean, it's not bad that the rates stay stable. We want to have the prices come up a little bit and the rate come down, but so far not much of that. The big one I'm going to be watching today is the Nasdaq. Nice little move to the upside here in the overnight. They're back up here to the 450s. So remember the 400, 420s, I think it was 420s before we had the level at, but right now it's like 410. 370, these two support areas, 310, 370, and the 410s for rotations back up. Looking to buy against those rotations back up. So starting off the same way, had a nice little melt up on the Nasdaq as well, going into the close yesterday. But Nasdaq has the little bit more range to work with for sure. So they backed off a little bit. A nice little correction down here to the 23,000. Looks at 23,000 held. So we were down there for a while. We had this looks very much like a retest and a retest failure. So a retest failure like this could very well be a little base formation for another leg higher. So keep your fingers crossed that they keep going. We may see our 401ks explode here going into the fall. So we will see. But at this point, we are back up to this upper area. So starting off range bound, I would favor the long side to get started. Looking to buy against that 410s, 370s, 310s for rotations back up. Below 310s, taking off that long bias and going back more towards the short side of the market. Looking for another leg lower. Now we have the, you can see here that 310 level down here, the London low. It's a low volume area. There, if they have a small attractor. And if they run down, they can certainly run down and stall there. But I would still be on the short side to see how far they want to run it at that point. So we'll see. So that's a NASDAQ to get started. But NASDAQ, I mean, these big techs are the ones swinging it so violently. And so far, I mean, I saw yesterday's trading on the sell-off. The big techs wasn't that hammered. It looked pretty good. They were down, but it wasn't like 10%. Oil and gold is quick on oil. Let's start with oil. Nice little pop to the downside. They were up here in the overnight yesterday. Day session showed some weakness, back up retesting the high at 65.60s. Now the overnight completely kind of collapsed down here again. So volatile oil. It's kind of a hard to say. I would say not necessarily volatile, maybe more cross currents. It's stuff happening out in the world and the market reacting to it. So right there, whatever happened here, probably some announcement of some sort when it comes to oil, and absolutely big move to the downside and been drifting lower since. Settling in and down here at the 64 evens. And if you look at oil in the bigger picture, we are right back to this attractor again. So they were up here probing, took out this upper edge for a bit. Now they're right back to value again. So that's oil. I would start off range bound and probably start with a slight bias to the downside. See if they can retest these lows, maybe take it lower. But if they can't, I'm probably going to stay around this attractor point, around the 63.70 to 64s, and just build value. So that's kind of what I'm thinking on oil. Haven't traded oil for a while now. It's just not, it's hard to find opportunities. They move like this, big moves and then nothing, and then big moves and nothing, and it'll be too many cross currents. Gold, however, has been on a tear to the upside. They're up here testing the highs again this morning. So popping out gold, you can see they traded higher, a couple of sessions violently higher. And now they're up here flirting with the 36.16s, 15.16s. So far, I haven't been able to extend, but this is price discovery territory on gold. So I would just stay on the long side. But with gold, it's so volatile. If you look at capital flow, you see what I mean. You see they took out this upper edge at 35.50s. They traded here for a bit at around the 35.50s. But this move to the upside started here and back. They started down here for the 3400s. I mean, you see the initial run. It starts down here, starts running, and never looks back. And this is just definitely something going on in the market, general financial markets or something. You know, gold does this. It's an absolute tear. So they ran technically from the 34.15s up to the 36 or $200 on the upside. And at one point they're going to run out of gas, and most likely we're going to see a hard retracement. I would not be surprised if we are down to that 35.50 pretty violently at one point here. But that's gold. That tends to move like that. So I'm staying away from it right now. Unless I find a really good opportunity. But getting in on gold is same right now. It's the same as trading the NASDAQ when it's moving hard. You just get whipsawed and you get shaken out of trades left and right. So it's hard unless you are willing to trade with bigger stops and take the bigger drawdowns and bigger swings. So, but it could be some nice coin made on that. But initially I would start by looking to buy against that 3600s, 3590s for rotations back up. Below that London low, 3590.93. Wait, sorry, it's 3593. Below that level, I would be looking for a retracement. that single print G print there, it could be a potential buying opportunity. That would be the last one I would consider. If they run down and test that single print G and then run right back up again. But at this point, looking to buy against the 3602s, 36, 3593, 94, and that single print at 3587. Rotations back up below 87. I think you're going to see rotation down to the 3550s. A hard rotation right down here too. If I scroll this up, this little attractor here, 3550. That's a little volume attractor, so you can retrace this in it pretty quick if they decide to start taking profit or sell some of this gold. So pretty big moves on gold right now. So I'm just kind of, as I said, staying on the sidelines unless I find a really good opportunity. But these bars up here are big. I mean, this will pop to the upside at the end, 15 up to the 18. So it's like almost 30, 35 ticks on the upside. I'm trading with a 40 tick stop. So normal bar sizes here are bigger than my stop size. So that's just not a good thing. You have to have a really good edge. And you can see that the edges are not that well defined. They tend to run them back and forth. A lot of volatility around the edges. All right. So anyway, so that's gold. Stay on the long side for now, at least until they take out that lower single print at 3587. So okay, so back to the ES, and at this point, ES and Nasdaq is pretty much where we left it. All right, so what's that lower low? What's that London low? Lower low, London low. For see if they take that out, then we'll back on the short side. See if they can run it down to the lower attractor or lower. But giving it a little bit of room this morning to see if it's going to be if this strength is going to hold on or not. Alrighty, guys, we'll wrap it there for now, and I'll see you back at 11:30 for the next update. So good trading, and I'll see you back then.